Hey everyone, I hope you're doing well. Today is July 3rd, 2026, and I received a $135.12 paycheck for the month of June. Straight cash into my brokerage account that I can use today for today's expenses. Right here, we're looking at a picture of the summer solstice. I cleared out a couple more trees on the lookout, and I'm getting some incredible sunsets. So if you feel like coming down and seeing that, hit me up. Anyways, this is not a retirement account that I'm about to go over. My income account is technically an individual account that is built for today, not someday like retirement accounts, okay? This is real cash flow that I can withdraw and use now, this $135. The best part is that I did not sell anything to get paid. The paycheck came from my money making money. Instead of me keeping my stored value in my bank account and stored in cash, I simply keep my hard work in my brokerage account stored in great companies like Realty Income, Agree Realty, and great covered call ETFs like SPIN and JetQ. My account value is $18,112.10. I am slowly contributing to my account balance and reinvesting dividends at the same time. And my plan is to continue reinvesting dividends and contributing until I reach $1,000 a month, which is more than I've received this entire year so far. So big goals. I'm a little over 10%, really 13.5% of the way there. So if you like my message, if you like the income account idea, please like and subscribe and share with your friends and get them on this wave of an account that's built for 2 days problems and not some days problems. So my daily rate was $4.50 a day, which is pretty darn good. Remember, my quarterly checks will be a bonus because of my large position in Stag Industrial, an industrial REIT. That daily rate of $4.50 is 7 days a week. And now I want to introduce you all to a new segment called the weekly tracker. So I really, as my monthly income grows, I want to be able to manage how I'm going to spend it. And it's important to note now that week one is the biggest week, which I don't mind because I'd rather have my money now than later on in the month. And as you can see by the top pairs of the week, my covered call ETFs, my largest positions really, JetQ and SPIN, all pay on the first of the week. And then I really like how this portfolio has my REITs, which are really my second largest positions, Agree Realty and Realty Income, paying in week 2 and week 3. So as I grow those positions over time, my second week and third week will continue to grow as well. Week 4 is DOC, Tesla, and NVIDIA, which are the YieldMax funds. So week 4 might be small, but we may be able to get week 4 up. And then week 5 is really interesting. It's the second largest week, being at the end of the month, with Ethereum 3% covered call ETF, the Berkshire Hathaway OMAH, and Stretch. A lot of negative news going on with Bitcoin. I should probably be picking up some more Stretch. That's going to be on my watch list that we'll go over later. So June purchases, once we go over the charts here, you'll really see why I've been doubling down on Realty Income. And now the sector that I'm focusing on is XLC. XLC, more than 40% of XLC is in Google and Meta and Netflix. And let's look at the charts real fast. You can see with Google, we've had a lot of selling pressure in June into July. Meta has been by far the most depressed out of the communications sector. They had good news on Thursday that they're going to start selling some of their AI storage capacity in their warehouses, in their data centers. So that's really important, but really depressed price action, even though we all still get on Facebook daily, sometimes multiple times a day. And the third largest holding in XLC is Netflix. So you can see that all of these prices have been depressed. Therefore, we shouldn't be surprised that XLC, the sector that holds all of these companies, has also been depressed. And then we can add a layer on top of that. If we want to start receiving more paychecks, thanks for the State Street covered call ETFs on the sectors, in my opinion, I've been picking up shares here, from 24 down to 22.8. Trying to get my average cost down, trying to be strategic when I buy into these sectors so that I don't get caught in these price erosions. Because when we have these big sector rotations, that's my favorite time to start accumulating, because the price is down. Therefore, I won't suffer from so much yield erosion, because these covered call ETFs pay out such a high distribution, sometimes more than the average return that the stock produces throughout the year. So if it, the S&P 500 produces or averages 11% a year, but the SPIN ETF pays 11, which it doesn't, it only pays 3, then you may experience a little price erosion. So I'm really trying to be strategic into my sectors. Like I didn't add any to XLK this month because it's been the hottest sector. Now we're getting a little bit of a rotation. Gerald Peters would call this a stage 3 distribution phase. But I'm not chasing that. And I don't have any XLI, the industrial, right now because it's in a stage 2 breakout. You can see here back in April, it looks a little, I'm not saying XLC is going to have the same price action, but here's when I'm trying to buy, at the end of March and in April so that I don't face so much price erosion. And if we look at XLI, I guarantee you the lowest price is back here in April. XLI. Look at that. I mean, you would have, not only would you be receiving a monthly dividend, but you also wouldn't face so much price erosion. You'd be up on your position. So that's what I'm trying to do with these sector ETFs. And so far it's worked out pretty decently. Another little one that I contributed to is XLB. I'm very bullish on material sector, especially if we head into space. We're not mining, this is big thinking here, we're not mining asteroids yet or any mining on the moon. So any supply we take from Earth automatically decreases the supply, and it's not going to be easy to get that material back from space. So we're kind of taking a lot of the supply here on Earth and putting it out into space, which we never, if you look at a supply and demand chart, if you decrease supply but demand remains constant, then price has to go up. So that's my thesis on the material sector. This is a really nice bull flag, or you could argue that it's a cup and handle. As we go forward, anything over 52, 53, and especially if we get a breakout, I may contribute to XLBI. Okay? So on the REIT side, Realty Income, I think I did a fantastic job in the month of June accumulating shares in this nice price range from $59.50 to $63. And I'm very bullish on Realty Income. Let's look at Stag Industrial. I did the same thing. I bought a little bit of Stag in this range from 36 to 39. ADC, another one. And as you can see, ADC and Realty Income have very similar charts. So now I'm not going to be buying as much into these REITs. I wish I could accumulate or did accumulate more, because REITs are a very, very good way to balance out price erosion. They have much less price erosion. They pay much less of a dividend, but that's okay. I mean, you can see the past 3 years, you've got just a nice, steady increase in price. Here is a REIT that I am watching. EQIX. It's very expensive. It pays a very small dividend. I find this to be more of a store of value play than a dividend play. But they own and rent data centers. So this would be my exposure into the data center market in my income account. Now, the only other thing that I can do and watch for this month, XLK, we're getting a little bit of a rotation, stage 3 distribution. XLY looks interesting. We've been in a long consolidation. I'd rather pick it up in a stage 4 decline. I'll continue to watch and maybe add to XLC into the month of July. XLI, I'm just waiting on. The energy sector, not a bad time to be buying into oil and gas again. XLEI was my largest position going into 2026, and it's played out the best. It's my biggest sector return, no doubt. XLRE making a decent little cup and handle here. Only if we get lower rates would I be bullish on this. XLF was a really nice one to accumulate back in May and in June. The material sector is one that I'm watching. Consumer staples is definitely one that I'm watching, although I don't see a lot of growth happening in this staples sector. This could be a nice rotations play. Utilities, let me go back to the daily chart. Utilities, decent price here. And then the healthcare sector, one that I really should have paid more attention to in April, May, and in June. What an incredible rotation. Let's look at XLVI and how much it's up. So not only would you be receiving a 12% monthly dividend, but you'd be up about 10% on your account. So that is the month of June in review. And looking into July, I'll be watching the energy sector, the communication sector, and EQIX for potential buys. I received $135, which is just absolutely incredible money, making money. I'm trying to get to the $1,000 goal. If you guys like my message, please like and subscribe. I want some feedback on this account. I think it's revolutionary to be way more focused on an account that pays you today. I do not want to be 60 and then I get to spend my money. I'm trying to have cash flow now. Cash flow over cash grow. Please understand that there is no guarantee. This is not personal investment advice. I have no clue what your risk tolerance or goals are. This is just reviewing my goals and the potential of an account that pays you today. Thank you so much for tuning in.